Good morning, everyone. Thank you for joining us here today at Simpson Seeds' first live event. So we are excited to have this event and have you with us today. We're hoping that this event will give you some information that'll help you think about some decisions that you may need to be making as we are ending the year and heading into 2021. And we're here to partner with you and in this new way of virtual. This is something we wanted to be able to touch base with people and have an opportunity to share some information. So just to give you a quick some housekeepings and an outline, we will be doing some question and answer at the end of each presentation. So you'll see at the bottom of your bar there's a little question answer sort of section. So feel free to type a question in there, and we should have a few minutes at the end of each presentation to answer some of those questions. Our outline today, we're going to start with Trevor Simpson. Trevor is our farm and seed manager at Simpson Seeds and has farming experience, been farming his entire life, and is also intimately involved with the new seed technologies and new seed varieties. So he'll be presenting on some of those varieties that we have available. Next, myself, I'm Elyce Simpson Fraser. I'm our Senior Vice President here at the company, and I want to give you a quick presentation on some key lentil markets and looking forward into 2021 and some opportunities. And finally, JP Gervais from FCC was gracious enough to do a presentation. JP is the Vice President and Chief Agriculture Economist at FCC. So we thank JP for joining us today as well. So with that, I will kick it off with Trevor's presentation on our seed varieties available here.
Thanks, Elyce. Yeah, so the varieties we'll be talking about today, we have available through Simpson Seeds this year for the 2021 growing season. I'll cover some lentils, some durums, new wheat, and some flax and canary as well. So we'll get started here. So for red lentils, these are the first few varieties here you might be familiar with. The first one being CDC Impulse. It is a clear field. It's 107% check and maxim. The thing about Impulse is that it's a little bit larger seed size than what you typically see from maxim. It's quite noticeable. So when you go to seed this product, you do have to seed it a little bit heavier. That's one thing to take note of, is if you're, for example, if you're typically seeding maxims around 50 pounds, you're probably going to be shooting for, 60 to 65 pounds to get your plants per square foot on this variety. But it's been quite popular over the last 4 or 5 years, and it's gained a lot of acres, has a great reputation, and has performed very well for a lot of producers. Another note on that one is through Simpson Seeds, we do like this variety. It performs very well in the splitting line. We get very good splitting yields with this variety. So there has been times where the buyers are, when they go to look to purchase red lentils, they do specifically look for Impulse sometimes, and there has been the odd time we have paid a premium to get that variety. So that's something to keep in mind with this Impulse variety. It's been around for a while, but it's proven itself and is becoming quite popular. The next one is Proclaim, CDC Proclaim, at 105% check of maxim. It's clear field as well. Seed size is similar to maxim. It was basically came out the same time as Impulse and was the maxim replacement is kind of where it landed. And some guys were like that idea of replacing their maxim with something that was a little bit higher yielding. So they it did get some traction. I don't think as much as Impulse, but some guys are having some good success with it, and they're continuing with that. Another variety of red lentil that I find quite interesting actually is CDC Red Moon. It is a conventional lentil. It doesn't have the Clearfield technology, but it's coming in at 114% yield check of Maxim. And it is the highest yielding red lentil out there as of now. We grew it about 4 years ago, and when it first came out, and 4 or 5 years ago, and the yields were absolutely phenomenal. Like, we did see that yield check and everything, and it just kind of sat on the shelf for a little bit. Not a lot of guys were interested in this variety because it lacked the Clearfield technology. But it was about I guess would be last year is that interest in it really picked up. And I think the reason being is that a lot of guys are reverting back to conventional methods when it comes to their spray program. And because some guys are having issues with the Group 2s, maybe not working as well for them, like the Odysseys and Solo and stuff like that. And I think it's partly due to an introduction of maybe a couple new chemicals being registered for lentils like Focus and Volterra, and guys having some pretty good success with that. I know I've had really good success with those chemicals on conventional lentils, and find sometimes the controls significantly better than the Clearfield side of things. So if guys are using those conventional methods, it makes sense to go for the highest yielding. And we did grow it again this last year, and it was by far our highest yielding red lentil crop that we had. And all these red lentils that we talk about, we had all of them in the ground this year, and Red Moon really pulled through. And my dad, he's still runs the combine for me, and after we harvested the Red Moon as the last field we harvested, he said, I don't know why we'd grow anything else. So it's a really good variety and something to consider when you're looking at your rotations. Two new red lentil varieties that we have are CDC Simi and CDC Nimble. Both are coming in at 109% yield check. It's hard to find a difference between these two varieties. They were released at the same time, and we propagated them both through. One we grew in Swift Current, and one we grew here in Moose Jaw. And when it comes to the seed guide, I can't really tell the difference between the two. There's nothing that really stands out between the two. The seed size is similar, if not exactly the same. I didn't get a really good comparison between the two because one was grown in Swift Current and one in Moose Jaw. So I haven't had that field side by side, but they're becoming quite popular already in red lentil sales. The Nimble is actually already sold out, and guys are booking in the Simi quite fast too. So if you're looking for a Clearfield Maxim size, it kind of seems like this is the one that's you really want to take a look at. And I don't see a lot coming down the pipeline for new red lentils at this point. So this was kind of something they released, and is going to be it for a little bit. So if you do get into the Simi or the Nimble, it's something that's going to be not going to be obsolete, next year or the next 2 years. So if you are looking at that, something to take a look at. Rolling on the large green lentils, we do have CDC Green Star and the new CDC Lima available. The Green Star is a conventional large green lentil. It's got a great yield check at 98% of Maxim. It's the highest yielding large green lentil out there. By a significant margin, actually. And it came with the largest seed size as well with this variety, which sometimes the processors do like. The one thing that really stood out with this variety with me when we first started growing it, besides the yield check, was that, and we did see that yield benefit in the field that every time we did grow it, but the one thing that really stood out for me was the anthracnose resistance. It's got better anthracnose resistance as compared to every other large green. Every other one's coming in at very poor versus this one's coming in at fair. So it's not quite, red lentil or small green lentil resistance, like they're all coming in as good, but going from a very poor to fair was actually a significant improvement for large greens. I love growing large greens. I always have, and have since the start, and its anthracnose has been an issue on years where you get even average or above average moisture. And looking back to the old Greenland variety, whenever we had good growing conditions, the anthracnose would set in and it would go flat on the ground, and it could be a pain in the ass to harvest. But The Green Star stood really nice, a lot better lodging resistance, and I do believe that that's attributed to that better anthracnose resistance. And if you are looking to get into large greens, it's something to definitely take a look at. Typically, if you get average to above average moisture, you're looking at 2 applications of fungicide, and Green Star, is your best chance at looking at maybe just 1 application of fungicide in crops. So good variety. Like I said, though, it's conventional, so using conventional chemicals. One thing we did see with Green Star was metribuzin, or Sencor resistance, or tolerance, I should say, was significantly higher than anything else we'd seen. We've been pushing the limits on how much we're applying every year, and we have done up to 125 grams an acre, and it didn't bat an eye at it. We haven't seen any damage from Sencor on Green Stars as of yet, and that would be in the Moose Jaw area. So if current, we don't use Sencor because of the soil types and stuff like that. So definitely, if you are into this variety and you're looking at Sencor, definitely talk to your agronomist about your location and your soil class and what kind of tolerances you could see there. The new one being CDC Lima. This was quite exciting addition to the large green lentils. It is the new Clearfield large green, which was much needed in the class. The other ones, Empower and Improve, they were okay, but the yield checks were quite a bit lower, and the color retention wasn't great on them. So this one's the yield check came up pretty good on to 92% of maximum, and the color and way better color retention. And when I first started growing Lima, I did have it side by side against Green Star, and because it was only going to be used for our own propagation reasons, I did leave it to last, and we're getting the Green Stars off first. So most of them were for commercial or exports. We were going after that better quality. So we left them to last, and we did get some rain about halfway through, and then the Green Stars we saw a downgrade in color there. But when we finally got to the Limas, the color was actually really good. We actually ended up getting an X2 for it, or a good 2 for it, and it did weather in the field for quite a while, and we saw that again this year on the color retention. It's really nice. It doesn't. Green Star has a tendency to want to split sometimes, and we have issues with it splitting, where Lima, it holds up really good, and really sound product, and really good color. I would compare it to the old Greenland for color retention. So that was something nice to see, and it's also got the little bit larger seed size as well as compared to the other large greens too. So that's nice. We're getting a lot of interest in this variety already, and we had good yields, so we do have a bit of product left or whatever. But if you were looking to get into the Lima, best to give us a shout and inquire about it sooner than later. Small greens, not a whole lot new here. Same old. CDC Invincible is, the tried and true for small greens. It's been a really good variety. Clearfield, 94% yield check. It's got, good anthracnose and good ascochyta resistance. So, for Clearfield options, that's it. There is a new one coming down the pipeline that we haven't actually even started propagating yet, so it'll be a few years away, but it looks very promising. Has a, it's getting over that 100% yield check, and a good increase in yield there. The other one that came out 3 or 4 years ago was a CDC Kermit. It is a conventional small green, so again, the small green market's not huge, so we didn't get a lot of traction with it, but it is the yield check is coming in 11% higher, and we have had a few farmers grow it that were Invincible growers, and they said they wouldn't grow anything else because of the increase in yield that they were seeing. And again, it's got the good disease package that you'd see with Invincible or Reds as well. So we do have both those available. So give us a shout if you are interested. Niche market lentils, Indian head or beluga lentils, a lot of producers call, is a very niche market lentil that you can grow. It's conventional. This seed technology is old. It goes back before my time, and there hasn't been any improvements to this variety. I've heard that the CDC is working on something new, and it is coming down, but it's a really old variety that they actually used a lot of times to had good disease resistance, and they were using it to breed better disease resistance into the newer varieties that they were producing at the time. It is a conventional, of course. The yield check is unknown; it's not in the book. But I've been growing it for probably 6 or 7 years now, every year, and in average to above average moisture conditions, when you're getting good lentil yields, I'd say it's probably coming in around that 80% yield check, 75 to 80%, as compared to a red lentil. Some years though, on drier years, it has been yielding better than other varieties, and we've been seeing that in dry years year over year. So I think it does have a little bit better drought tolerance as well. It's kind of a cool little cool lentil. It's just a small little black lentil that because it's so small, you're seeding it at like 30 to 35 pounds max per acre, and kind of interesting variety to grow. It's the lentil itself is tastes really good too. So if you're into eating lentils, it's whenever I hand out lentils to my friends or something like that, they all like this one the best. So interesting variety. We do have that in certified. If you were interested in getting into that, I would suggest production contracts when getting into the Indian head or beluga lentils. Like I said, it is a niche market, and it's good to make sure you have an outlet for some of your production when it comes to them. Another thing I should mention too is it's got very good I guess weathering, because it's so small and it's black, and it's sat in rain some years for 3 days, and we've left it to last, and we've gone back and grabbed it, and we're still getting #1 on it. So it's good in that respects. The other niche market lentil we have is Spanish brown, the SB4, which was released last year. This is a variety that is exclusive to Simpson Seeds, so you do require a production contract when purchasing the seed, and the balance will be sold through SSI as well. The Spanish brown program has been stewarding that for quite a while now through Simpson Seeds, and we started with SB1 and now we're on SB4, and they've made significant improvements on this variety compared to the SB1 or 2 or even 3. So if you haven't grown this in the past and haven't grown the SB4 and grown the other varieties, you're going to see a significant improvement. I would compare it to, it's coming in 104% yield check maximum, and we see that for sure. We had it up against some reds a couple years back, and it yielded the same. So, it really similar characteristics to red lentils when it comes to size and stuff like that, except for the color is brown and it's got some mottling to it that will distinguish it from red lentils. So we don't have programs out right now for the SB4, but I'm sure Elyce will be letting you guys know when production contracts are available. And if you'd like to inquire, give us a shout. Moving on to durum and wheat. I guess before I move on, I didn't have a slide on chickpeas or peas. We do have chickpeas available. A leader variety right now is what we have available for chickpeas. I like the leaders because it's a little bit earlier maturing and maybe doesn't have the biggest seed size, but especially in the moose jaw area, if you're going to grow chickpeas, it is the earliest maturing, and the maturity on the back end, I feel, is the biggest risk when it comes to chickpeas in the moose jaw area. So we do like that variety. But coming down the road for chickpeas, we do have a new variety called Lancer, and it's a Clearfield chickpea that will be available next year. So if you're interested in that, we will have that available for the 2022 growing season. For peas, we do have green lentils available this year, or sorry, green peas. It's a razor variety, and we've kind of stuck with that one, and a couple new ones have come out. But we find the processors and the splitters, they actually prefer this variety. When it comes to green peas, they get a little picky on which ones they like, and so they seem to really like this one. And we do have good sales on that year over year. So we have that available as well. And we got a new green pea coming down Forest, and it's looking pretty promising. The processors are liking it as well, and will be available next year as well. So that'll be CDC Forest. Moving on to durum and wheat, we started offering Congress, AAC Congress, a couple years ago. It was a little bit slow going to get traction off the start, as you know, new cereal varieties usually do. But the yield check is really good on it, and we had a hard time finding a new durum on our farm that was going to really take over what we were growing. And at the time we were growing Transcend, and whatever we threw up against it, we didn't really like any of the results. So we stuck with Transcend, and then Congress came out and we got it up to a side-by-side check, and it blew Transcend out of the water. And we grow this in subcurrent quite a bit, and we're seeing great drought tolerance to it as compared to some other varieties that might burn out on the back end. This seems to be holding up and better than some of the other varieties. So it's a really good variety for the western side of the province, I think. The new variety we have this year is CDC Credence. We had some available last year, and it sold out within a couple days of us offering it. And a lot of guys are interested in it. It's got a good yield check on it, but it's got better Fusarium head blight resistance as compared to some of the other varieties. And when I say that, I guess in the book it has that little asterisk beside the MS rating, you know, that Transcend had, and the footnote is that it's showing, you know, slightly better resistance as compared to some other varieties. So if you're concerned about Fusarium head blight and whatnot, this is probably your best variety to take a look at. A lot of interest out in the Regina, Moose Jaw area, you know, the wetter areas, and has better lodging resistance as compared to Congress too. So you can throw the groceries at it and should stand up for you. So we do have that available as well, and give us a shout if you have any questions on it. We have AAC Brandon wheat available. I don't know if I need to talk about this much. It's been a standard in wheat varieties for a long time, and you know, guys just like growing it, and a lot of guys seem to have some success with it and stuff like that. So it's a variety we do have available for hard red spring wheats, and if you're looking to pick some up, we'll have some available. New wheat variety that we have is a Sparrow varietal blend. It's I guess a Canadian. It's a special purpose wheat, is what it is, and basically it was produced as an ethanol market, I think, is what it was, and taking over another variety in its class called Pasteur, that a lot of guys were getting very good yields out of. So this has actually got a significantly higher yield check over Pasteur, so it is coming in at 130% check in the wheat varieties, which is huge, and it has massive yield potential. We grew it a few years back on just a trial basis, and I think it was going 20 or 30 bushels an acre above all our other cereal varieties. So really interesting variety. Has very good lodging resistance, has a really good rating on Fusarium head blight as well. The varietal blend, you get the midge tolerance with it too, and it was produced, I think the initial market is for ethanol for sales, but there has been quite a bit of in the special purpose, a lot of markets show up through the processors. And I had a discussion with P&H yesterday, and it is falling into a class where there is some interest from other countries on this variety, and as long as it's meeting a certain amount of specs when it is coming off, they are exporting it to China and the States and stuff like that too for human consumption. And it's really interesting because it does pay a premium over and above the ethanol market, but there is a discount as compared to like a registered hard red in Canada of about 50 to 75 cents a bushel. So, but coming in at 130% yield check, it can be quite profitable some years, and especially if you can grab some of that export market. And I see this as almost a hedge on quality as well, because If on the back end you get a lot of rain, or you do have quality issues, that you should have a lot of it, so you can sell to the ethanol market and still create a pretty decent bottom line. So I kind of like throwing in a little bit of this. So if it is a bad year for quality, it's something that's good in that respect. And the other thing I should mention on this is it is a later maturing variety for sure. So if you are going to grow this, or you are interested in growing it, it probably should be one of the first things that you put in the ground to make sure you don't get froze out on the back end. We've grown it for a few years now. Same with past year. It's got the same. It's about the same as past year when it comes to maturity, and we've never had an issue with it as long as we put it in first. So. Canary and flax varieties. We do have Chivo Canary. It's 106% yield check. It is itchless, so no worries there. It is different in the sense that it has a yellow grout layer on the inside versus black on some of the other varieties. And this variety was there was some interest in it on that human consumption side, because they can mill it and turn it into flour, and they can make pasta and bread out of it and get a decent color out of it, whereas some of the other canaries, they are black, and visually it's not that appealing. So this was kind of produced for that market, and obviously that market is yet to develop. So but it is a decent variety. We're pretty happy with it. It goes through the combine significantly better than some of the other varieties for some reason. So harvesting it is a breeze as compared to some of the other ones. And we do have a new canary coming down the road. It's just a number at this point, but it will be available next year as well. Something to keep a lookout for. As for flax, we have CDC Nila flax. We've been growing CDC Nila for about 5 years now, and we've been really happy with it. We've had quite a few varieties in the past, and this one's really pulled through. And in the seed guide, it is coming up at 111% yield checks, the highest in the book. It's got good lodging on it, and another thing I like about it is it's shorter straw length. The sorrel that we used to grow, if you had good growing conditions, it could grow quite high, and there's a lot of material to put through the combine. We had good conditions on Nila a few years back, good rainfall and good yields and stuff like that. Basically perfect conditions for it, and it was still quite short. So that was a nice variety for that. And we're seeing a lot more interest in the Nila in the last year or two, because of the yield check and the shorter straw and stuff like that. So if you are looking to get into the flax market, it's a good variety to take a look at. All the seed varieties that I've talked about are available for pickup in Moose Jaw, and most of the popular varieties are in Swift Current as well, available for pickup. We do have delivery options available. We've actually worked with quite a few producers on, if they're looking to pick up a new lentil variety, then they would deliver something, and then we would, they'd pick up seed in return. But we can also, work out something where if you were looking to sell something to pick up a new seed variety, we can deliver the seed to you and pick up a load of lentils to be delivered to the plant as well. So we have done that a few times, and depending on where you're located, delivery can be, and when you can take the product, delivery can easily be worked into any of these varieties. We accept Visa and MasterCard on all seed sales, and we do have discounts on bulk and early payments as well. So if you are looking to book something, it's good to let us know what kind of volumes you're looking at and when you can take it, and that can reflect in the price. So that's all I have for the seed varieties right now. Let's see if we have any questions here. Let's see, Chris asked Congress and credence. Oh, sorry, Elyce is going to be asking me these questions, Elyce.
That's okay, no problem. I'm glad you can see it. That's a good thing.
Yeah.
So yeah, Chris was just asking, how does Congress and credence stand up to lodging?
The Congress isn't rated very good. We've been growing it for 4 or 5 years, and we have had good rains, and we're not shy on nitrogen as well. We're upwards of about 100 pounds of nitrogen in the product, and we've never had an issue with lodging on the Congress since we started growing it. And but it isn't rated very good in the book, and I could see some years maybe having some issues with it. The credence is quite a bit better for the lodging, and a lot of guys are interested in that variety because of the better lodging as well. So if you're really concerned about lodging, Credence is definitely the one to go for.
Okay, great. I think there's just one other question there as well, was what is the protein expectations for AAC Brandon?
Offhand, I don't know what the rating is for it, but since we started growing it, we have been getting great protein levels with it. And I'm not an overly experienced hard red spring wheat grower, so not really a lot to compare it to. But I've never had any issues when delivering it to the elevator or on any samples that have created any problems for us, or we've never really had many major discounts. Of course, when you get higher yields, the protein drops, but that's to be expected with most varieties. But we've been really happy with Brandon, and as do most producers, it's the most widely grown hard red spring wheat in Western Canada for a reason, and it's because of all the traits that come with it, including protein.
Great, thanks. One other quick question before we move we'll move on to my presentation after is yeah. Do we treat durum, or do we offer treated durum?
We can work. Pioneer is just down the road from us, and we work with them. So producers are requiring treatment on any varieties for that matter, is that we can take it to Pioneer, get it treated, and deliver to you after that as well. So they have pretty aggressive rates there, and it's pretty good. Usually they're just looking for the chemical sale. They don't usually charge too much for the actual treatment. So that is definitely available for any of these varieties, and they do handle all chemicals as well. So that's definitely not a problem. If you are looking to get this delivered treated, we can work that out as well for sure.
Perfect. Thanks, Trevor, for your presentation and information. And as Trevor mentioned, you can just give us a shout for pricing or to make seed bookings with us. So thanks, Trevor.
Thank you.
So we'll move on now to the key lentil market update session. So I have about a 20-minute presentation here for you. So I want to start with large green lentils. So taking a look at a little bit what's happened in sort of the early part of this marketing year, sort of the August, September, our top 5 lentil importers. First is India. So this year they imported just over 21,000 metric tons versus 34 metric tons of the previous year. As many of you know, there were temporary tariffs reductions that allowed lentils to move during this period. So they took advantage of that, and that was initially on until October 31st, and then they've recently extended it to December 31st. So we're coming to the end of that period. Government policy for cheap food always dictates this market, which is a lot of the reason why we've seen so much volatility and uncertainty as to tariffs and when those reductions may come in place. They just do what they need to do to basically keep food economical for the people. Supplies of pigeon peas right now from Myanmar and their local production is sufficient, so we're not seeing a lot of additional demand for green lentils to India at the present time. The second largest importer was actually Chile, and you'll notice this is quite a significant increase over the previous year, and this was purely the market overbought due to COVID. As you can imagine, with most products and lentils and other food products, there was just, sort of the hoarding thing that happened, and people, wanted to be able to have shelf-stable food because of the unknown implications of COVID. So they had government programs, and then the government canceled. So this is leaving the market quite flooded there right now with this additional product. Algeria is always a steady buyer from Canada, so they're pretty close on pace with the previous year. but they do import from Russia when they have some lentils. So they did import some stuff from them earlier on, but they do prefer Canadian quality. Fourth largest market being Colombia. So they're pretty much exactly the same number there. Again, they really like Canadian layers. They do prefer it, but they will import US Richleys if we're too expensive. So we did see them switch to some more US product as we saw the prices here progressively increase through the September-October period. So some of that is why you're seeing some pullback in price reductions is compared to US Richleys. That product is being sold at a level that's lower. Morocco, again, really high number, but purchasing again due to COVID, and this is mostly a small green market. So there was a lot of good movement in the early part of the year into that area. We are seeing a number of these markets so filled for the time being, and sort of holding off to see how the consumption patterns hold, if they change or hold stable over the next few months. So looking ahead into 2020 and some things to watch and be aware of, Ramadan has moved up to starting in April and ends in May. So what that means is the market brings in stocks and has it in place prior to the start of that holiday, because they really don't do a lot of business through that period in terms of like bringing in stock. So they try to stock up and have it well in advance. So that means that that product's going to need to be shipping out of Canada sort of January, February period to allow time to get there in time prior to Ramadan. So that's mostly large greens and sort of the Middle East area of the world that celebrates that. Mexico also purchases small greens for Lent, February to April, so is Lent this year. So there's going to be some product moving into Mexico early on in 2021. The Southern Hemisphere turns to winter in that June to August period. So we actually see their consumption increase during our summer months when it's colder. So we will start to see some of that demand come our way through, an April-May period for large greens, mostly there as well. Also, an unknown is we don't know, we're experiencing currently in North America the second wave of COVID due to our fall-winter period. So when that fall-winter period happens, we're not sure, again, what a second wave looks like for the Southern Hemisphere. So that could impact some demand. Top 5 red lentil importers. Again, India is the top one. They increased their imports quite significantly over the same time period last year. Again, the reduced tariffs allowed them to bring in. Australia is now filling any of that demand. They're under the same tariff structure where they're reduced tariffs as well for any Australian type products. So Australia is currently filling that to meet that deadline as well. India, in addition, has increased their plantings. They're planting for the rabi crop right now, and for lentils, it's increased about 20%. So that's going to point to some extra production as long as there's no weather issues inside of India. Turkey is a very large importer this year compared to this time last year. This is mostly due to less production from the Kazakhstan, Russia area, which we often refer to as the Black Sea region. They significantly reduced their lentil acres over the previous 2 years. So that product just wasn't available to Turkey, and they rely on importing from other origins. So recently, they have reduced the import duty for red lentils as well, and this is mainly due to their currency. They're struggling economically, as are a lot of countries, and this was a move to help them import more economically into the country. United Arab Emirates, fairly similar to the year before in terms of imports, but they are a very steady importer as they are a key distribution center into the MENA region. MENA stands for Middle East, North Africa. So that country really serves as a flow-through distribution spot for green lentils, and they bring in red lentils and split them and then distribute them. Pakistan is next. Again, quite a significant increase. That pipeline had just really run empty, and they needed to be resupplied. So that's why you saw the large increase in that country this year early on. Sri Lanka was reduced over the period of last year. They do prefer Australian product due to the size and proximity. So it's just they can get it so quickly due to how close they're located to those countries. The other thing that impacted is that the splitting industry, the government imposed temporarily that they are not able to export and only produce for their local consumption during COVID. So this was a measure again that the government took in during these COVID times to keep food inflation from happening and economically feeding people in their own country. Looking ahead to what is in the future for reds, I literally got off the phone. I had about an hour conversation with some people in Australia last night, and the production is looking significantly larger than forecasted. In some of the initial forecasts, they were thinking about 650,000. It's looking like 800,000 plus. So some of you may remember 2016, Australia produced like almost 1 million metric tons of red lentils just due to some ideal growing conditions there. So this is making it difficult for Canadian product to compete for the next few months because Australia is just able to fill that those markets really quickly and with a lot of product, good quality product available. India's also increased the planting, as I mentioned in the previous one. So if it's a normal crop, this keeps Canada, potentially out of India for quite some time because they'll likely put the tariffs back in place to keep food inflation under control and pay their growers for their rabi crop. Turkey needs supply of milling product. However, Turkey is reliant on other production regions to supply their splitting industry. Turkey does produce their own crop, and they're projected to be about 450,000 tons. That's pretty much on par with where they're at, and they have a harvest in May. But they will need, product from either Canada or Australia to run their splitting industry. And again, they distribute into Europe and Middle East countries as well. Switching to some longer term opportunities, I wanted to talk about pet food is rebounding. The FDA had released some statements a few years ago that was kind of damaging for the pet food industry, that they said that was linking pulse crops to some heart conditions in pets that made the consumers obviously very concerned. And since then, the FDA has actually retracted that. There's no scientific evidence to substantiate that claim that it does cause any issues. So pet food, we're finding the pet food trends mirror human consumption trends. So with plant-based foods, grain-free, those types of diets, basically pet owners are saying, what's good for me is good for my pet. So we're just seeing that mirrored in their consumption and their buying trends for pets. And also with COVID, pet adoptions and pet ownership has increased. So, we could see this pet food take off again quite a bit more in the near future. And there was a recent study done, and this is just in Canada, is, would you pay more for healthy pet food? So what a consumer perceives as healthy pet food. And you can see here over 42% said yes and 35% maybe. So people are willing to, put those dollars towards their pets and give them healthy pet food. Another opportunity to look at is the longer people use pulses in their diets, the greater chance it remains permanent. So we did see a lot of people during COVID switching back to cooking at home, experimenting with different types of products, and also just taking a look at their overall diet and health and sort of reflecting on that. And this trend was already in place, but COVID's actually advanced it even further, and more people are trying plant-based products more than ever. And this little chart, just on the pea fractionation capacity, just you can see how the capacity is being built to meet the demand for this trend. And while this says pea fractionation, I just wanted to take a moment to say that we are working with some companies in the fractionation business, and it's not just peas. Peas have kind of paved the way, but they're very actively working on new research and development that looks at fractionation of lentils, faba beans, and other things. So it's sort of all pulse proteins as that this capacity is being built for. And just to kind of give, again, a really high level, and this is just for, just in Canada. So this isn't even talk about, the United States, Europe, and other large areas of the world that are also moving with the plant-based protein trend. So the plant-based protein in Canada is expected to contribute over $4.5 billion of GDP growth. And sales of plant-based protein products grew 7% to $1.5 billion in 2016 and 17. And if you read articles, I've read articles, this has advanced quite significantly over COVID. So down here it states 40% of Canadians are incorporating more plant-based foods into their diet. I would venture to say, you're up to 60%, even higher over the last year or so. So there's other market drivers that are, that are impacting and influencing this trend. So changing eating habits, population growth, we're heading to 8 billion people and growing. So how do we feed our population sustainably and with affordable food? Environmental stewardship, people are thinking about how does, the food we eat and how it's grown impact our environment. And finally, just overall health benefits. So what do I need to do? Protein and fiber are sort of the top two items that are really being lost the word. They're really being sort of at the forefront in terms of our overall health and incorporating those things into our diet to improve overall health. So there's innovations happening. Trevor just talked about, seed technology and production. So how can we produce the protein source through lentils and chickpeas and peas, and then into the food ingredients market. So what the extraction process, and then finally formulation into final process products, and that ultimately ends up, impacting the consumer and how we get it to them as well. So really taking a very, very long-term look, globally, the total protein demand will double to 943.5 million metric tons by 2054. So that's a huge amount, and I know it's very long-term, but I think it just really points to where we can fill that need that's going to continue to grow for many years to come. The market for alternative proteins, including plant-based, is expected to reach 10.8 billion by 2022. So that's very nearby. So it's accelerating quite quickly, and it's quite exciting, the new developments in those areas. And I'm sure you've seen it. Pulse products are available in pretty much standard now in everyday food, from chips and snack foods to fortified like milk replacement products. And we also work with a number of pasta plants in Italy, that are producing some of this green lentil pasta and red lentil pasta, and they said the trend is huge. They fill Costco's and Walmart's, and the North American market really loves this protein pasta. So just a few final thoughts. Progress in the new protein products for people and pets is very positive. Investment in new facilities and technologies is a focus for Simpson Seeds to bring value to lentils and other pulses grown in Saskatchewan. We also want to create and build local opportunities and value for growers. And finally, we really want to continue to grow our industry and, you know, be able to positively impact our community here. So we count on your support to do that, and we're definitely thankful for everyone in the whole chain that allows us to continue to be in this business, and we're really excited about what the future holds. So that concludes my presentation, and we probably have a few minutes for some questions.
We don't have any questions at this point on the chat board, Elyce, but I was interested, okay. Just one real quick one, is that you mentioned the Black Sea region production has dropped, and obviously in the past it's impacted Canadian prices in a big way. Do you see that trend continuing, or do you see them coming back at some point?
Yeah, that's a great question. Ultimately, producers are similar minded, I think, in any production area. So they're going to look at what they're being paid for products, and is that an incentive, you know, for them to make money. And right now, you know, the prices are looking fairly good. However, they are experiencing very good pricing and movement on yellow peas and wheat and durum. So I think there'll be some, but it'll come down to what happens and what kind of shifts in all commodity markets happen over the next 2 to 3 months as they head into their planting decisions as well. But it's likely going to be there, but maybe not nearly as high as we saw it sort of 2 to 3 years ago. But yes, if they produce more, it'll definitely impact us.
Okay. We did have one question come through, and this will be the last one, I guess. Is any indication on new crop pricing at this point? I know it's early, and you know, with market conditions and the way they are and the uncertainty there is, but is there any insight you could give?
I think at this point, everyone's really, what's the word for it? Really reluctant to step out because we're experiencing very non-traditional patterns due to COVID. We're experiencing a lot of economical things that we're unable to know how those things play out. You know, once the transition happens between Trump and Biden, how does the U.S. market and U.S. currencies affect the overseas markets? Every country is suffering economically, so their ability to buy is also very difficult right now. So they're managing through, but people are, because they're economically, every country's been impacted, everyone's very careful because no one wants to make any missteps and potentially, you know, be hurt financially. So I think people are waiting to see how we get through the next few months here, and any improvements with COVID and how that will impact the global economy.
Sounds good, Elyce. There has been a few more questions roll through here, but you can just maybe answer them privately. We can move on to the next presentation, and you can get back to them. All right.
Okay, so we'll move on to our final presenter, JP, and I will let him take it away.
Okay, good morning, everybody. Thanks. First of all, thanks so much for the invite from Simpson Seeds. It's really a pleasure to be here. I am going to have a little bit of a PowerPoint here, so bear with me. I'm just going to put that up on the screen. And here it is. So as I was saying, thanks so much, everybody. It's great to be here. What I want to do is there'll be two parts to this presentation. So I want to share with you all what FCC is looking at in terms of the economic drivers that matter for profitability. And there'll be two parts to this presentation. And I think it's a nice follow-up to what we heard so far. There'll be a broad overview of what's going on in the economy, focusing on the variables that matter, I believe, interest rates, the value of the Canadian dollar, currencies, and so forth. And then I'm going also to project a little bit on profitability as well, looking at crops, various crops, and as well as say a little bit about land values. And really, I'm getting more and more comfortable doing this in a virtual setting. I still prefer face-to-face, but I'm getting a little bit more comfortable. And one of my learnings over the last few months really has been that the more questions we have, and I was just happy to see that there are more Q&A or more questions coming in the chat box, and the more questions we have, I think it makes it a lot more interesting and a lot more entertaining for everybody. So I'm going to look at my watch from time to time just to make sure that I remain on time. I'm going to use the next maybe 30 minutes or so to provide the overview of the markets and the economy from our perspective at FCC, and then I'm going to turn it over to you, Elyce, so that we can have a little bit of a chat and see what kind of questions people have on their minds as to with regards to 2021. Just a brief word about the recent past and what at the outset of the recession, or at the outset of the pandemic, or the crisis, so to speak. There was a lot of discussion as what the economic outlook would look like, right? And it was a collection of various letters for me, right? So people like myself were thinking, all right, so we're shutting down the economy ourselves, right, for good reasons, public health considerations and so forth, but we're doing this to ourselves. We're doing this to our economy. And so we know that there's going to be a significant cost to doing so. But then once we start reopening, that's what will be really interesting, is that we're going to see a bunch of people laid off, and then businesses are going to start to rehire. And perhaps, if we do this really fast, we're really efficient at controlling the disease and the pandemic here in Canada, then we're probably going to have this sort of V-type recession where there's a really big cost, big significant cost, downturn, quick, fast, but also a rapid recovery. We could have also more of a U-type recovery where, it's going to drag a little bit. And I would argue that's a little bit of what we're saying. I'll say a little bit about that later, but it's a little bit of what we're saying right now. I mean, as we are starting to reopen, or as we started to reopen the economy, then we had to be really careful about what businesses would be allowed to reopen and so forth. And businesses have started to hire more workers, but there's still a significant share of people that are, still without a job, and that creates a definite cost on the overall economy. There was also the prospect at the time of a second wave, and whether or not this would create this pattern in which there'd be a downturn, we start growing again, then another downturn caused by a second wave and a second shutdown and so forth. That would be the W-type recovery. And then finally we are, putting this pandemic behind us and we're starting to grow again. And finally, I think the one thing that everybody, there was quite a large consensus to want to avoid this situation is to find ourselves in a situation like an L-type recovery where, there's a decline in the economy, a downturn, but then we're stuck in that pattern of growth, but not getting back to where the pace of economic activity, which is the dotted line, was looking at, right? So it was all this mix of various possible situations, and believe it or not, economists like myself managed to come up with a different letter, the letter K, to highlight the fact that it's really a two-tier recession in which, the letter K points upward, and that's represents a segment of the population and segment of businesses, the segments of the economy that are doing relatively well throughout this pandemic, this crisis. And there's another segment, the part of the K letter that points downward. There's another segment of the population that's not doing so well, right? That is still unemployed, mostly the less educated workforce, working in services and so forth, right? So I'll say a little bit about what this really means going forward. If we keep track of what's going on in the world versus what's going on in Canada, So if I start on the right hand side and look at Canada here, like I said, big downturn, big downturn in Q2, big recovery in Q3, but the bottom line, it was still 5% below where we were prior to the pandemic, right? So it's actually 5.3%. So we still have ways to go, and it's a lot easier to gain back what we lost at the beginning of this recovery than gaining back what we lost towards the end of the recovery, right? So it's this pattern of faster recovery, but as we're recovering, the pace at which we're recovering is slowly coming down. And so that's what you're seeing up on the right-hand side of the screen, right? If you look at October, which is the early estimate for GDP, it's 0.1%, growth of 0.1%. So obviously the second wave is getting in the way, right? But that's what really matters, right? Is the idea that those last few percentage points are going to be really hard to get back. And there's a lot of optimism with vaccines and so forth, and I hate to rain on the parade a little bit here, but and that's really good because that at the end, there's light at the end of the tunnel for sure, but we're far away from where we were prior to this recession. I think that's the one key message, right? So if you anticipate with vaccines and so forth that the economy is gonna be really humming along in early 2021, I would caution that this is perhaps a little bit too optimistic. And you see on the left-hand side, you see what, with the red bar, you see the impact of the recession. But for most countries, aside from China, perhaps, at the end of 2021, right? So more than 12 months from now, you're still not going to be where you were prior to the pandemic. We're 5% below right now in Canada. And by the end of 2021, most projections, if not all projections, a very, very strong consensus that we're not going to be back to where we were prior to the pandemic. So we have long ways to go. Vaccines are going to help, but it's not the end of the story, I would say. The one thing, one indicator, and then we were just going over a review of some of the most major buyers of Canadian pulses, and so I'm just I'm listing a few here, I guess, and obviously the different countries and the control that they have over the number of cases matters a great deal in terms of their expectations for growth. The situation in the U.S. is frankly quite terrible. It's going to get worse before it gets better. We're still just learning about the extent of some of the the pandemic and the impact it has had. The Thanksgiving holidays has had. The U.S. Thanksgiving holidays has had on the number of cases, and it's quite terrible. And I would think that at some point in time, perhaps in early 2021. We're still going to have a lot of states that are not fully reopened. And I would argue perhaps even states that are closing down parts of their own economies just to get this situation under control. India is actually as a pretty good model in terms of controlling and managing to bring down the curve. The one thing with the vaccines as well is that think of all the logistical challenges for a country like ourselves, a rich country, fairly sophisticated infrastructure and transportation and so forth, huge, very significant challenges in getting vaccines out to the population. So imagine that those challenges in countries like India, Turkey, and other buyers of Canadian pulses, for example, are quite significant, if not a lot bigger than the own challenges that we have, right? So again, this idea that yes, there's light at the end of the tunnel, but the situation could get worse in some parts of the world before it gets better. Hope not, but I think it's definitely a risk. And so if we see these countries, if you think of in India, for example, managing to get through the pandemic, just like it's doing right now, those are the more up to most recent data points when it comes to the pandemic in these different countries. I downloaded the data from the John Hopkins website this morning. But if they manage to go through the situation like they're doing now, I think it bodes well for an economic recovery, strong demand for Canadian ag commodities in general and so forth, right? So I think that's one indicator that you want to keep in mind as well, because it does have an impact on the ability of the populations to feed themselves, as well as the economic intervention or economic support that those countries are have to put out to their own population, and any type of increase or worsening of the evolution of the disease in each of these buyer countries could actually have an impact on where we are. So everything that I've said, it matters for a number of different reasons, right? So one of which is interest rates. I mean, most operations do carry some debt, and because of investments and so forth, and it's just in a lot of ways necessary to carry business. And so what I have is the picture of average borrowing costs. So think of long-term, short-term rates, variable rates, fixed rates, put everything in a basket, come up with an average, right? So that's what it is in front of you. It's not just ag, but it's business average borrowing costs across all sectors in Canada. I'm showing up point A, which before the pandemic, point A was the lowest average borrowing costs on record in Canada ever. Go back, I believe 90 years is how far back we can go with the data. So lowest borrowing costs, and I mentioned this a number of times, as this was starting to climb in 2017, I mentioned, hey, we're just coming off the lowest on record. So that was a great opportunity to lock in some very low interest rates, and guess what? It's still time. But interest rates are trending upward. Don't expect interest rates to go up really high, but nevertheless, they're trending upward. And then they're flat, in 2019, and then down in 2020, obviously with the pandemic. I did not expect. I really did think that point A was the floor for interest rates, but that was not counting on the Bank of Canada and what it actually did. The Bank of Canada throughout this pandemic was the most aggressive in putting liquidity out there, right? So obviously the size of the economy in Canada is different than the size in the US, right? We're 12 times, or they're 12 times larger than we are, their economy is. But if you account for that size of the economy and you put things on the same scale, the Bank of Canada was more aggressive than the Federal Reserve in the United States in putting some liquidity in the marketplace. And so that had a huge impact. Well, huge and small at the same time, because it had an impact obviously on average borrowing costs, where point B is. But at the end of the day, the spread between where we are now and where we were in the spring of 2017 is what, 35 basis points, 0.35%. So that's low, but that's also not that significant. The bottom line is, I don't know if I need to call a bottom where we are now. The bank actually came out this morning. There was a scheduled announcement. So every 8 weeks, the Bank of Canada is putting together an announcement. Sorry, every 6 weeks. So this week, so today it just came out and said, we're not going to raise interest rate. We're going to keep the same level of monetary activity in the marketplace, so basically buying bonds so that they can bring not only the short-term rates down, but also try to work so that they can bring those long-term interest rates down as well. So that's the reason why we got short terms really low and we got long terms that are really low as well. So, question we get often as a financial institution is, should I be locking in the rates? The answer is obviously, well, not obviously, but the answer people don't like to hear is it depends, right? But that really is the case. If you're willing to, low rates right now, the short-term rates are really low, and that brings an opportunity to carry this forward, as we're not expecting rates to go up anytime soon. Having said that, you don't want to wait to hear or read about the Bank of Canada. If you think of their statement today, well, you don't want to wait 6 months from now and read about their statement saying, oh, we're going to be thinking about raising interest rates, because by the time that statement is out, it's already too late, right? The markets have already anticipated some of that in the months prior. So I think it's good financial management to assess where you are, assess what kind of investments you need to make, assess what kind of risk exposure you have, and really just think of your own risk appetite and ask yourselves, whether or not you're comfortable with the term debt that you have on the books, and if you're comfortable with the terms you have. The one thing I'd like to say as well is just speaking to that K-type recovery, right? This recovery and two-tier recovery where there's a segment of the population that's doing well. I mean, it's interesting to see that despite all the financial stress for a very large segment of the Canadian population, debt to income has been coming down from 174 to 158 in just 3 months. So that's a lot of savings. That's a lot of households that have been able to pay back some debt. That's Canadian households. And if you look at the savings rate, it's roughly at 12% right now. And prior to the pandemic, it was like 1 or 2%. So there's more savings. And so my point with this is that there's some pent up demand out there. Now, how are Canadians going to spend their income when, the economy reopens? Unknown. And how much of an impact is that going to have on the ag and food industry? I would say unknown. I think, travel is not going to resume as fast as the opening of the domestic economy. So I would think that a lot of that pent up demand is going to find its way, or that a lot of that income is going to be spent domestically. But I think it's one thing to keep in mind as well, is that there is a lot of pent up demand. Now, the flip side of that is that there's also quite a bit of debt, and that's on the government books, right, on the public book. So this is the picture at the federal level. This is prior to the most recent economic statement. So what we know, because of the economic statement that was released by the federal government, is we know that the federal debt deficit relative to GDP is going to be, this is, I'm not sure if you see my mouse moving, but in 2020, this particular data point says basically that for 2021, the deficit to GDP would be 15%. Quite larger than the all-time record in 1985. But we know from the recent data a couple of weeks ago that this is actually going to be closer to 17%. So large deficit. And of course, that deficit is going to be put on the books, and that's going to increase the debt that the federal government is carrying. So if you look at on the right-hand side, if you look at debt to GDP, this was for 2021, this was planned or projected to be a little bit under 50% in September. Well, we know that this is going to be a little bit over 50% now. Low interest rates matter a great deal for the federal government because that's the blue line, and that's their ability to service that debt. And because of low interest rates, the amount of money that you allocate to pay down debt or cover that debt or carry that debt is actually coming down. So, which is good news, but at some point, and what a lot of people are asking about is that we're going to have to get this situation back into balance. And what is that going to look like? I would say, just on the basis of my arguments that I was making early on, that, we're not out of the woods yet. There's going to have to be more done to bring the economy back to where it was prior to the pandemic. I don't think that this is going to be a focus in the short term, getting back the budget on the balance. At some points in time, though, 2022 and beyond, I do think that this is going to be an emphasis. And I can't see right now a path to bring this under balance without raising revenues. It's not just going to be a matter of cutting back expenses. I think, there's going to have to be an increase in revenues. But this is way down the road. And frankly, it's a bit too early to speculate. But, people are asking, what does it mean for fiscal policy down the road? As I said, way too early, later 2022 and beyond. But for now, I do think that, what government's focus is on really getting back the economy to where it was prior to the recession. Currency matters a great deal, for sure, in terms of profitability. We have a vested interest in seeing a dollar, our currency, lower. Of course, if you have to make investments, and usually, when you buy inputs, the lower the Canadian dollar is, the more expensive these inputs are. But overall, generally speaking, we have, like I said, a vested interest in profit margins are higher when our currency is lower. And what you're seeing up on the screen is really it didn't take too long for our currency to gain back some of the value, right? We went below went all the way down to 67, between 67 and 68 cents, you know, for the exchange rates. That's the light blue line you see up on the screen. But then it started climbing. And really my point with presenting the value of the Canadian dollar relative to the US dollar and the value of the Canadian dollar relative to the euro is to point out that why is the Canadian dollar going up? And you can point out, you know, low interest rates in Canada and so I should say rising oil prices and so forth as the recovery starts or as the recovery starts and so forth. But really, at the end of the day, it's really the decline in the US dollar. This has been the biggest driver of that increase in the loonie. So I haven't looked at where we are now, but I find it a little bit puzzling, frankly, to see where we're at in terms of our own currency. And I do think that a lot of it's function of a lower US dollar. And is the change in the US administration going to change the outlook for the US dollar? I would be tempted to say not really. You can make a case that there is going to be a little bit more willingness to work with partners, and this is going to be a little less focus on bringing the US dollar down between, you know, from the Biden administration compared to what the Trump administration was carrying out in terms of policies. You can make that case, but at the end of the day, in theory, I think it makes a whole lot of sense. But in practice, you know, we've seen very few changes when it comes to actual policies and between different administrations. And so I'm not so sure that we're going to see a major change in focus when it comes to trade or economic policy. We're likely to see the US be able to implement a major stimulus bill. That means, you know, more US debt, and I wouldn't be surprised to see the US dollar remain weak, and which would, you know, sort of support our currency into 2021 above 75 cents. I don't see it break above 80, but you know, like I said, I wouldn't be too surprised so that we're flirting closer to 80 than 75, you know, throughout 2021. As you see, our dollar with regards to euro, the euro has been roughly flat. So it's really our currency, the US dollar, that has lost value against most major currencies, among which the Canadian dollar. Okay, so focusing a little bit more now on, for the next 15 minutes, 10, 15 minutes or so, focusing a little bit more on the ag markets. Want to do a couple of things, and really at the end of the day, it's going to be weather and exports. These two things are what has been driving the ag markets recently. You can look at our own production, and of course, you know, if you think canola, for example, smallest canola crop in the last 5 years. Look at wheat, second largest on record, you know, Canadian crop. And of course, these things matter. They matter for the balance between supply and demand in the Canadian market. But it really are the global factors that have more of an impact, as you'll see in just a second. So just to finish off on this particular slide, I mean, the light blue and dark blue are comparing the December estimate that we got last week versus what the expectation was with regards to September. So a little bit of some downward revisions, especially for canola, lentils. Everything else, though, is looking better than what we thought in September in terms of production. You know, you can also compare the light blue bar, which is your 2020 production estimate relative to the 5-year average, again, to get a sense of, you know, where we're at. Most would, aside from canola and corn, I suppose most would point out to a larger output than the 5-year average. And so, you know, especially when it comes to wheat, I think that's what's keeping some of the margins down a little bit. But aside from that, you know, I always say that's not my first area of focus when I look at our own production estimates. I really am first and foremost looking at what are the global markets telling us about the demand, because our own supply, yes, we're a major producer, but there are just so many other factors that matter that I always look to demand first. So on the demand side, just a couple of, for actually, when I was thinking about that, you know, last night when I put this together, I was like, well, this is not super relevant, but it is actually, you know, because I'm focusing on soybeans on the left-hand side and corn on the right-hand side. And of course, those are not the crops you're thinking of in your location for sure. But those are what, I think this sends a pretty good signal as to what's going on in the world markets for commodities in general, right? So soybeans, think of this, right? So the chart on the top left-hand side, right? So north west corner, that shows what the target for China in terms of their own purchases of US exports, the target of what China wanted to get at, and it is a little bit of a report on where they're at in October, right? So you see the difference between what they imported in October versus what is the target for the entire year 2020. A lot of what we're seeing is really driven by China. The commitments that they've made for 2021, purchasing commodities from the US, as well as some of the sales that have actually been going through in 2020. So at the bottom there, you got the export pace in 2020, recent export pace of 2020, US to China. And well, it's not just US, sorry, it's not just US to China, but it's because China is the largest customer. It is a lot about China. And you see that, just think of how much China is off their target. And yet, just think of how much the market's moved. And you'll see that later on the next slide here. But just think of that, right? The movements in prices that we've seen in the last really 3 months versus what it would have been if China had actually carried through their plans, right? It would have just been out of this world in terms of impact, right? But just a little bit that China did, again, compare what they are in October versus what they said they would be doing, has been enough, combined with some weather out of South America that didn't look too good, although recently more rain in South America, so some of the concerns there have been alleviated or have been eased somewhat in terms of the size of the production out of South America. But just to think of that to me is quite significant. So China is going to drive a lot of the prices, right? So you think soybeans, you think canola then, right? And you think that explains with our smaller crop that I was talking about just before, and as well as strong demand for oilseeds, that explain a little bit of the pattern that we've seen in prices. So on the far right, on the right-hand side, you got corn. And again, African swine fever in China, the fact that they had their pig population decline so much in the last couple of years, but they've been rebuilding, and now I think it's starting to show up. And so if you see 2018-19 is pretty minimal in terms of corn imports, but now we're again going into 2021, major commitments for 2021, and so major exports for major purchases for the late part of 2020. If you go at the top corner there, the pink and green line are telling you that for now 4 consecutive years we have production that is projected to be under consumption. So stocks are coming down at a time where we have the major buyer ramping up production, ramping up consumption. So that also is a pretty good signal that prices are projected to increase. So if you focus on the prairies, this is a tool on the left-hand side. This is a tool, I'm just keeping a check on time here. This is just about another 5 minutes. This is a tool that we use to think of profitability, but this is, I guess, not a good time of the year to be using that tool because this is looking backward. This is looking at the 2021 marketing year. So if you think for yourselves now, I mean, obviously you probably have still, not obviously, but you may have still some parts of your crops that are not priced, right? And you're thinking about the remaining part of 2021 for sure. But also, pretty soon, like I would say into January, what we're going to do is to actually think about production of 2021. So the marketing for 21-22. So again, the timing is a little bit, we're in between periods here where we're looking back at the 2020 crop being marketed in 2020 and 21. And so that's the profitability picture. Canola is showing some profitability, but a lot of the different crops are quite tight. And that is, if you look at input costs, we haven't seen the relief when it comes to input costs that we I would say, expected. So I think it's definitely a focus into next year as well, as for businesses to focus on costs, make sure that you do understand the economics of, inputs, purchases versus, the return. It's not just a matter of price paid, but it's also a matter of yields and so forth, and the risk around, those profitability projections as well, thinking about 2021. Are we going to see prices continue to move up? Look at canola, right? I think it's been nothing short of spectacular. It broke that 475. It was in that 425 to 475 range for a long time, and all the way back to even prior to the issues that we had with China when it comes to market access. And now, despite the fact that there's still some market access restrictions for Canadian canola, I mean, we see it go up as well. So do we expect that to continue? I think it'd be quite optimistic to think that this is going to last way into 2021 and for the 2021 crop. But having said that, a lot of it just rests on China and what kind of relationship are they going to be developing with the U.S. When you look at wheat, the thing has been it's been more muted as a response, and certainly lately we've seen futures pull back a little bit. Red lentils are showing some good profitability. Peas, it's a little bit more difficult, and wheat and durum, it's just a matter of keeping an eye on global inventories, and then just try to understand a little bit of where inventories are going at the global level, because it's such a global commodity. So our own production is going to have a little bit of an impact as well in the world market. But you also have to look at what's going on in Europe as well as Russia and the US to understand the global picture a little bit. Just a quick word on corn and soybeans. Much of the same pattern, right? Corn was so depressed early on in the pandemic because of the restrictions on driving and so forth, and the impact on fuel consumption out of the US and ethanol consumption. But there's been a really, really nice rebound. I mean, that's, going back to 450 just on the basis of demand. Because in 2019 we had those prices, but it was mostly on supply concerns, weather concerns, right? There were flooding in the United States and so forth in the U.S. Midwest. Whereas now it's entirely it's entirely demand driven, which is really good news, I think. And you see the strength in the oil seeds as well that is expected to continue into 2021. But I would put some caution around whether we can see that last for the 2021 crop. Right, so marketed a year from now. So I'm not so sure that I would extend that strength all the way to, and I would take some profits and lock in some profits if possible at all. Just big picture stuff here, right? I think revenues are, and then the reason I'm putting this up on the screen is really to talk about land values, and I'm going to end with this. This is the picture at the aggregate level. This is cash receipts. You got Canada, Saskatchewan, and the other two prairie provinces. And if you focus on Saskatchewan, look at Q3 for 2020. Right, this is a major. I don't know if you can see it here, or maybe I can actually try to use a little bit of a pointer here. But this is what I'm talking about here. This is quite significant in terms of an increase in cash receipts. Obviously, good harvesting conditions and so forth, which are putting a lot more receipts in Q3 versus what we had last year with all the challenges with harvest and so forth that delayed some of the receipts into Q4. So I don't expect this difference between 2019 and 2020 to be as significant when we look at Q4. But it's going to be a good year. And the reason I'm saying all of this is, I'm not going to have time to talk about livestock, is just to think of land values. And this is a picture that's dated, obviously, right? It goes all the way to the end of 2019. But focus on, I think I can do that, focus on these two numbers right here, right? So 6.2 in Saskatchewan, 3.3, that's the average increase in land values for 2019. What we have is data for the last 12 months, ending June 2020. So you go back to the end of June, you look back at the last 12 months, and you compare that pace of 12 months, right? So you need to compare 12 months with 12 months. You can't just pick, 6 months is, well, it's useful, but it just doesn't give you an idea of, perhaps seasonality and patterns of land purchases and sales. So I like to focus on the 12 months, hence the reason why I circle these, right? And you look at the previous picture, was showing land values in 2019 at 6.2 in Saskatchewan. And despite the crisis, or despite the pandemic, going back in the last 12 months, all the way to the end of June, we had 7.9% in Saskatchewan. Now, with very strong cash receipts, and I think the sense going into harvest and so forth, if you think of, in September, October, I think there was a sense of optimism with regards to the year that we were going to get, and the idea that cash receipts would go up. Low interest rates matter a great deal for the land market. So all of that to say that when we publish our results for the entire year 2020, so going all the way to the end of 2020, December 31st, 2020, we're going to release that in March of 2021. I would suspect that we're not going to be far off what we had last year. So pandemic or no pandemic, the market for land appears strong. Obviously, though, there are pockets where it's flat, and then where prices have been climbing fast in the last few years, and we're seeing very little movement. We're still seeing some transactions, but we're seeing very little movement. But I would caution to think that the land market is going to stabilize in that 2 to 3% range, like we've seen in some other places. That 3% in Ontario, 3% in Manitoba. I would say I wouldn't be surprised, when it all comes down to next year, looking at the entire 2020, that we still have a number that's quite similar to what we had in 2019, with another 6% add-on on top of land values. And that would be driven by, in my opinion, the low interest rates we have in the marketplace, as well as a pretty good year from a farm income standpoint. So that's the last slide, really. I haven't paid any attention to the Q&A box. We'll see if we have anything there. I am optimistic. I am optimistic that the economies are going to recover, and vaccines are sending a proper signal. But, and then that's a big but, in terms of the caution that businesses need to exercise going forward, that yes, the economy is going to grow again, but it'll take time. And then there's this idea of a two-tier recovery in which we have segments of the economies are doing okay, and frankly have been growing, even in the food, and the food supply chain. If you look at the different food segments, we got seafood that's been hurt, or we got potato products that are demand that has been hurt and that has been declining, and so there are segments within the industry even that have been more challenged. Certainly in the livestock sector, it's been more of a challenging year than for crops. If you think grains, oilseeds, and pulses. But having said that, I really think that we're on a good footing to have a recovery. Pay attention to the relationship between China and the U.S. I think that's my number one wild card, thinking about 2021. We can discuss later, but I was just going to say, if this relationship still based on the idea that China needs to buy volumes and volumes of U.S. exports, at the end of the day, I think that's good for us. I was one to say, well, it's not good if we're getting kicked out of the Chinese market, but from a pricing standpoint, I think I'll take the U.S. purchases as a second best option. I think obviously we'd like to have our own market access and free access into the Chinese market, but second best solution for us is for China to keep buying at the pace that they bought, and I think that would sustain some of the pricing, maybe not at the level we've seen recently, but certainly sustain some of the pricing into 2021. So on that note, I would just turn it over to you, Elyce, and I'll just stop sharing my PowerPoint and see if we have any questions.
Great, thanks, JP. I think that was a really great overview of things to come. As you said, that there's kind of a keyword, it depends. I feel like that's a statement that a lot of people, in no matter what industry you're in right now, is we're definitely navigating uncharted territory. So everyone's sort of, cautiously optimistic, but treading lightly at the same time. So just kind of finishing off with the land prices, I was going to ask you a question about it, and then you ended with that. But given what you put up there, do you see then that rate of land increases is going to continue for 2021, 2022, like 2 or 3 years at that pace? Is that sustainable?
Well, I don't think it's sustainable. I was going to say I'm afraid. I'm not afraid. I do think that we can sustain land values where they're at if we can sustain farm income. So that's the number one thing, right? So the valuations we're currently seeing in the marketplace, in terms of, if you think of price of land relative what you can get on a per acre basis in terms of gross income or net, that ratio of price of land relative to income is at some of the highest points it's ever been. Now, the thing with this year is that I do think that because of positive outlook on income, I do think that this is going to provide a little bit of a boost on land values. And I think we can sustain that as long as we can sustain farm income. Now, can we stay forever in that situation where land values are so high relative to income compared to what the average has been? Maybe not. And so, again, what is likely to change that pattern? Well, significant or consecutive years of pressures on income would be one thing. Higher interest rates would be the second thing. And for these two things, unless 2021 is a difficult year when it comes to weather, unless a major trade disruption happens or whatever I think I'm fairly confident that the demand for what we're growing is going to remain very strong. I think that's the number one thing, and then interest rates are going to remain low for some time. So it's not going to be in a situation that's going to last forever. But I do think that in the foreseeable future, whether it's a year or two, I do think that land values can be sustained at the level that we have right now.
Great, thank you. And so, kind of speaking about commodities then in terms of price strengthening and price support. So again, just in your opinion, are we sort of going to continue on this upward trend, or are we flattening out in terms of major commodity, like major grain pricing, sort of for the next 6 months or so?
I see flattening where we are, and perhaps some downward pressures as well, depending on what kind of crops we're getting, in South America and everywhere else as well. I think it's prudent, it's cautious to actually be locking in some of the profits or profit opportunities that exist in the marketplace right now. I really do think so. It's not to say that we can't have prices move up, but I do think that at the levels that we have right now, I think it'd be prudent to actually lock in some profit opportunities. And again, depending on the situation, if somebody or an operation has been successful locking in some, their cost of production and a little bit better for a large share of their production, then maybe you can be a little bit more patient and see what the next few months are going to look like for those different markets. But I do think that the next movement in the marketplace is going to be coming from supply and information, and so depending on where we get a little bit more of an idea of what production looks like in South America and elsewhere in the world, I think that's what's going to be the key.
Great, thank you. Well, you must have done such a great job because we don't seem to have any other questions yet. So I think with that, we will wrap up. So I just want to thank JP and Trevor for your presentations. And I also want to have a huge shout out. These things require a production team. It's not an easy task. So thank you to Kara and Desiree for operating the backroom stuff. It does take some significant work, and I sit here on pins and needles and hoping there's no technical stuff. So I imagine that they're in that same spot. So thank you, FCC, for running the back production and for collaborating with us on this event. And we just hope that you glean some information, and that'll help you make some key decisions for yourself in the future. So thank you. And oh, one quick note too, we did record this, so we'll be posting it in case you want to relook at any of the presentations or refer someone to view it. So stay tuned for that to be posted as well. So thank you very much, and have a great day.